Are you afraid of foreign banks?
Not at all. I mean, you look at, I always say there are clearly Indian banking structure, if you look at it. We have 72% with the public banks, about 20% of the private banks, in which there are two categories, old private sector banks and new private sector banks. Then you have foreign banks, then you have regional rural banks and corporate banks. The foreign banks, when they operate, they bring in best of the products globally available, which is plus for us because we learn from them. The private sector banks bring in the competition, technology capabilities, and new practices. That's plus for public sector banks. Actually, we have picked up on this. So it is good to have this type of structure because it brings the best of all the words. Otherwise, you're not exposed to the rest of the product.
How do you read the government's recent move or desire to get the foreign banks to incorporate in India?
That's absolutely good because I was just having a discussion with one of the foreign bank colleague here because he was having the same question because the largest bank globally, and if it has to be locally incorporated, what are the plus and minuses? The minus is that it gets the triple B minus rating, whereas the bank is triple A rated bank globally. Minus is they have to raise funds at a local cost, which is high. Otherwise, globally they can raise low cost.
Which makes them more aggressive as a result.
But I made a point to my friend here that if you're looking at India for the next 30 years, there's a huge opportunity in India as a country. If that is what it is advisable to look at a bank within the country. You have an opportunity. Today, if the offer is made for a foreign bank to come in and get incorporated locally, or to an Indian corporate to start a bank, Indian corporate will jump at it. If the same opportunity coming to a foreign bank, an Indian corporate will jump at it, will just pick it up because it's a huge opportunity. So it's the way you look at what is good for you. But otherwise, for the regulator, it makes sense to have control on the banks operating because that's the learning globally. And I think all the regulators across the globe are preferring this model.
Your balance sheet grew still very much on its net interest margin rather than on fee-based business. Does that make you even more of a traditional bank? And do you have any ideas of increasing the fee-based component of the business?
Oh yes, it's a very good question. You made a good analysis of it. If you look at our last 4 years' performance, for 4 years, our core fee income grew at a CAGR of 46%. And this year, we may end up with about 8%. So, after 4 years of exponential growth is getting balanced out because there are one or two corrections that has taken place in terms of fee structure during this year. Going forward, the capabilities to grow on the fee income because of the new avenues of fee income which has been introduced in the bank is intact. There is 1 year of a correction which is expected after such an exponential growth of 46% during this year, and we expect to grow at 25% consistently for next few years. Coming to net interest margin, it's true that this year it's been very good, but then we intend to maintain about 3.1 to 3.2% consistently year after year because of the reasonable growth in CASA that has taken place consistently over the last 4 years.
But what happens when the regulator finally starts to deregulate interest rates and deregulate the domestic money market?
Yeah, actually, regulators deregulate all the deposit rates except savings bank, which is about 25% of portfolio. The question mark is if regulator deregulates savings bank interest rate, what will happen? That is the question mark. Clearly the point is it's not that the bankers are not very comfortable in regulator deregulating the savings bank rate. But issue is, it is a country where if you go to the rural market, and if I take my portfolio, 55 to 60% in savings bank, 55 to 60%. Now, they are the beneficiaries who should be adequately compensated by this interest rate in savings bank. In case it gets deregulated, it may so happen that my charges on most of these transactions will get added, because bank will make money. In case interest rate goes up, my fee may go up because I may charge. But today there are basic accounts are not charged. We give it substantial part of its fee. So bank will find its balance. But the concern that we have is rural customers are not that well educated, should not lose out when the interest rate actually comes down. We are not seeing when the interest rate goes up, it may go up. When the interest rate comes down, it can come down to 1%. Whereas they do get now 3.5%. That's the. Otherwise, banks would be able to pass on the any up and down in the interest rate.
How international does a union bank have to be, or even you have to be as chairman of a union bank? How, to what extent do you have to follow your customers overseas? Is that part of your?
It is very much a part. Because the often asked question is, when India is such a large market, why should you have global aspirations? That's the often asked question. But how we looked at is, in one of our transformation, matures transformation process was that Indian corporates are truly going global. They're acquiring companies and they need a banking facility. And in case we don't follow them, some of the businesses which would have normally come to us, we would be missing. So that is the reason we opened our Hong Kong branch first, 2 years back. The bank branch is doing very well. We have approval to open a subsidiary in UK. We are in the process of getting the approval locally, and we'll be opening one branch in Sydney. So we are slowly, we're not aggressively opening, but we are just following our own clients, and it is a must. While India as a country is offering this tremendous opportunity, that's where the focus would be, but we will be following our corporates locally.
And on the technology front, what is the internet doing to your bank?
Oh, it's fantastic. As a matter of fact, I'm extremely happy with the technology has helped us. We have to look at, when you compare technology in India versus technology in other countries, the technology cost in India is almost only 10% of the technology cost in many other countries. And we are able to pass on the benefit to the customers very fast. What really surprised me is in 2008, when we brought the bank into core banking, we tracked how much is the transaction taking place on alternate channels. It was just 6%. In just 3 years, today, it is 47%. 47% of my transaction is taking place on alternate channels, and it is growing exponentially. So I think it's phenomenal, and our ability to pass on this benefit in the future is going to be fantastic.
You are due for retirement
Yes.
in about 2 years.
actually my term gets over in March 2011. That means 1.5 months. But I still have 1 more year to go. It's a process of extension that is to take place. It may take place. So I'll have more than a year to go.
How do you think you will be extended, or
that's the process is on.
Okay. And what would you like to be remembered for when your term is up?
I think when I took over the bank, I have made certain very clear promises to my colleagues based on a brainstorming session that we had. That is, by 2012, Union Bank would like to be #1 retail bank in customer perception, and all actions are towards that, and we will reach them in 2012. And second vision that we have set for ourselves is when we enter our centenary year, that is in 2020, we would like to be largest nationalized bank in the country. And for that we have set 2 benchmarks. One, by 2000 up to 2011, our growth should be 5% higher than the industry, consistent, not 1 year very high growth. Next, post 2011, should be 5% higher than the peers. we are clearly there. We have got 5% higher than the industry 3 years. We are well prepared for 5% higher than the peers for the next 10 years because the technology focus, product focus we have brought in. But at the same time, growth should not be at the cost of the profitability. So we have kept two numbers. One is growth has to be higher. Second, our return on asset, which was at that point in time for 2 years was 0.9. We said we'll target for 1.25. And we have got all 3 years 1.25%. Post 2011, we have kept a target of 1.35, while the growth is 5% higher than the peers. And that's why you see NIM growing. Our credit costs coming down from next year onwards. We are taking all the credit costs this year. So I'm very clear we will get that. If this too happens by 2020, when we enter into the year, we should be there where we set the vision. I would like to be remembered for that.
You like to be remembered for
enabling environment that is created.
Okay, and because you're a commercial bank, you have not exposure, but you are focused on the number of product sets.
Yes.
Is there any goal or ambition to create market share in any one of your key products?
Yeah, actually we have a very clear focused strategy. How we look at it is next 10 years. I'm just purely looking at the next 10 years. There are 3 segments of customers emerging. One is my existing customers. If you look at the industry, we have about 350 million customers. Industry as a whole. Next 10 years, next generation customers, what we popularly know as Gen Y customers, who are today below the age of 50, expected to be 350 million. The equal number as we are handling today. Another segment which is coming up is new bankable class customers who are unbanked today. Union Bank is well prepared in all 3 segments. An unbanked customer, we are ahead of curve. Our intention is to get a 7% market share in the unbanked customer, as against our present 3.5. New class of customers, our intention is to take 7% market share, as against today's 3.5%. So the products are in place, the strategies in place, technology capabilities are in place. I think we should be able to get it.
Mr. MV Nair, thank you very much for spending time.
Thank you very much. Thanks.